In today's episode, I'll talk about two interesting stories. In the first story, I'll talk about what exactly is happening in the world of AI after DeepSeek has entered the scenario. And in the second story, I'll talk about the EMS sector of India and understand with respect to the top three players as to what is happening in this space and what is there for investors like you and me and for people who track the markets as well. Welcome to the Daily Brief Show by Zerodha, where our aim is to cut through the noise and simplify the biggest news and stories in the financial markets in a way that is easy to understand, yet one level deeper as compared to your traditional news channels. I'm your host Anurag Bansal, and today is Thursday, the 30th of January. Look, DeepSeek has currently become the biggest conversation in the space of AI. And honestly, it didn't really come out of nowhere. For a very long time, the company was grinding quietly in the dark. They were innovating and were overcoming multiple barriers. And in Silicon Valley circles, it was known as the mysterious force from the East. Anthropic co-founder Jack Clark had also commented last May that DeepSeek had hired inscrutable wizards. But the thing is, the company was not really famous as such, but those who were in the know of things spoke of it with quite a lot of respect. And last week, the world saw exactly why. See, until very recently, America seemed to be the undisputed leader in AI research. Almost every important foundation model in AI came out of big American labs like OpenAI, Google, Anthropic, and Meta. Now, these labs had huge advantages because they were supported by massive tech giants with nearly unlimited funding. They also had access to the best computer chips in the world from NVIDIA, they had a huge collection of data, and they were filled with brilliant people based in the Silicon Valley. Now, all of this meant that American labs could afford to throw money at the problem. They were also comfortable losing more than $1 billion a year just to keep pushing the boundaries of what AI could eventually do. They kept on building larger models, feeding them more and more data, and relying on cutting-edge hardware. And as a result, their models became more and more advanced, and sometimes even so at a pace that almost felt faster than what most of us could even process. And in parallel to all of this, they also began locking up and safeguarding their methods and their code. They basically wanted to guard their competitive advantages, so they started to keep secrets and they rarely shared the details of how they built their AI systems. But just last week, this relatively new player called DeepSeek entered this space and it practically shook up the entire space with what they achieved. Now, like I said earlier, DeepSeek is not quite new per se. It was just quietly growing without attracting too much of attention. See, it all started as a small side project at a hedge fund called Highflyer, which was run by a billionaire named Liang Wenfeng. Highflyer used GPUs for building trading algorithms. Liang Wenfeng, who was an AI enthusiast since his college days, slowly brought together a bunch of brilliant engineers to work on his dream of creating something like Artificial General Intelligence or AGI. Then late last year, DeepSeek suddenly started making waves. In December 2024, they released an AI model called V3, which was almost as good as OpenAI's top-tier GPT-4o in many areas. It had new technologies under the hood that surprised experts, but the world mostly ignored it because, let's say, at that point, people were pretty much used to an amazing AI. But then in January, DeepSeek released something even more remarkable. They launched a reasoning model that went head-to-head with OpenAI's O1 model. Now, this model, for your reference, is known for its ability to think through problems. And this was a big deal because until DeepSeek did it, no one in Silicon Valley had managed to create anything that matched O1's talent for logical reasoning. And when people tried out DeepSeek's new system and saw just how good it was, the hype absolutely exploded. But the real shock actually came in when people discovered how cheaply DeepSeek had trained its models. DeepSeek claims that it was done for only about $5 million. And by comparison, American labs were spending hundreds of millions on each major training run. Also, mind you, DeepSeek did not have access to NVIDIA's best chips, which are the H100 chips, because the United States have banned exports of such advanced hardware to China. Instead, DeepSeek had to settle for the much less powerful H800 chip, which wasn't even meant for high-level AI tasks in the first place. But still, through some extraordinary engineering, its team reconfigured these chips at a very low level of code, almost at the stage of raw zeros and ones, to make them behave like top-tier AI chips. You can almost think of this like building a Formula 1 race car using only domestic car spare parts. And on top of that, DeepSeek smartly structured its AI models so they needed fewer computing resources in order to do the same amount of work. Now, one trick here was to make a mixture of experts where different parts of the model handle different tasks, and therefore the entire area is not straining itself all at once. Another way was finding ways to compress memory usage so the model only needed about 5% of the space which American models actually require today. And if OpenAI's claims are to be believed, DeepSeek also used the method of distillation in which they pose thousands of questions to rival AI systems like ChatGPT 4o and then gathered those high quality answers to train their own model. In layperson terms, you can think of it as studying from the notes of the top student in your class to ace the exam yourself. Now, of course, this saved them an enormous amount of time and money as well. And the madness does not even end here. After building all of this, DeepSeek released their model as open source under an MIT license. This means absolutely anyone can download it, explore it, modify it, and even use it to power a commercial product. And this is in very stark contrast to the American approach, which has become more secretive by the day. And for developers today, using DeepSeek is far cheaper, sometimes even 100 times cheaper than using big American models like that of Anthropic or that of OpenAI. Also, because DeepSeek freely published all its techniques, it pretty much gave away the blueprint of how to create AI that's extremely efficient and powerful. So in an era where American companies were trying to lock everything down, DeepSeek simply handed out all the keys at once. Now, this obviously changes the entire AI landscape in a big fundamental way. American labs still have advantages in raw computing power, funding, and the size of their teams. But after this DeepSeek saga, they might quite end up responding by speeding up development, possibly spending even more amount of money and trying to create models that leap ahead once again. But a very key part of the old world, which is where you simply use brute force to build the biggest and most powerful model, may not quite be the way to work anymore. DeepSeek's approach suggests that you can achieve the same or even better results with fewer resources if you are creative and efficient. So with all said and done, now the future could possibly go in two ways. One possibility is that there's still a lot of room for AI to get better, so the American labs and maybe the others as well will throw even more money at the problem with the hope of pushing AI to a level higher that no one else can reach. The other possibility here is that AI development begins to plateau in certain aspects and that most people cannot really tell the difference between today's best AI models. And if the second case happens to be true, AI then eventually becomes a commodity and people simply choose the cheapest or the easiest model for their needs. DeepSeek in this particular case is extremely cheap and also open source, so it could eventually become the default option for many businesses and developers around the world. Also, contrary to popular opinion, this might actually end up leading to a surge in demand for Nvidia's chips. And I know this might sound a little strange to you at first because you would probably think that if AI models run more efficiently, people would end up buying fewer chips. But there is this thing called Jevons paradox, which basically explains that when something becomes more efficient, people end up using it a lot more. Now, a classic example of this is fuel efficiency in cars. See, if a car could only drive 1 kilometer for every 1 liter of petrol, very few people would want a car because it is extremely expensive to run. But if someone suddenly invents a car that can go 20 kilometers on 1 liter, it suddenly becomes so affordable that many more people will end up driving. The same logic might apply to AI chips. If AI becomes cheap and efficient, way more people could start using AI for all sorts of things: school projects, home automation, small business ideas, and whatnot. And the total demand for chips could effectively climb because of this. Also, at this stage, it is really hard to say precisely how this will affect countries like India or any other part of the world. And this is because revolutionary technologies tend to spark changes that we cannot fully predict as such. And smartphones after 2007 are a perfect example of this. But what DeepSeek clearly shows is that you cannot stay ahead by just hoarding technology. You need to nurture and invest in human brilliance at the end of the day. The US tried to prevent China from accessing the best chips and technologies, but DeepSeek's engineers still found ways around these barriers through sheer ingenuity. It is basically a reminder that big budgets and top-notch hardware can be challenged, maybe even beaten by just a small group of people who are extremely clever and are determined. This also shows how AI began as a hopeful, open endeavor. OpenAI, for example, started as a non-profit company to help humanity in general. But the competition eventually turned fierce, with each player guarding its own breakthroughs. Meta was the only major American lab to open source a large model, which is Llama by the way, but it was still following the old Silicon Valley trick of giving away the core product to make everyone dependent on it later. Now, DeepSeek's version of openness is very different because it is not a strategic ploy. It is more like a gift to the world with almost no strings attached, to be honest. And now, with DeepSeek offering all the secrets to everyone openly, it is possible that even a hobbyist could run smaller versions of this model on a personal laptop without needing to log into any company's servers. People have already been tinkering with the model size, by the way. They have managed to trim it down to about 20% of its original footprint. And this could lead to a future where AI is just like a bunch of Lego blocks which anyone can play with, adapt, and incorporate into their own creations. Of course, no one can accurately predict what will happen next, but this certainly does feel like a very, very big and important turning point. With that, let's move on to the second story of the day and talk about India's Electronics Manufacturing Services or EMS sector. See, India's EMS sector is currently in the middle of a very significant and a very interesting transformation. And instead of just being a short-lived spike, this could actually be something a little more long-lasting in nature, and therefore it is a little important for all of us as investors and people who track the markets to know what is exactly going on. But before I get into the details, let me give you some very quick context. See, the EMS or the Electronics and Manufacturing Services industry mainly focuses on making electronics products and their components. This includes manufacturing elements like PCBs or printed circuit boards and displays, which are very critical and crucial for many aspects of the electronics industry. These are the parts that are eventually assembled into products like smartphones, TVs, and even advanced equipment which is used in healthcare and aerospace. Something you must know though is that most companies in India in this space are not major manufacturers as such. They are essentially just assemblers. They focus on designing, producing, assembling, and even repairing electronic products for other companies which are into smartphones, laptops, and telecom equipment. Now, a few players are now starting to invest into higher value areas like chip manufacturing, but this is still at a very early stage. For now though, most Indian EMS companies are fairly far from becoming full-fledged manufacturers, and they have a long way to go before they can compete in the more advanced parts of the global electronic supply chain. But all that said and done, the EMS sector is still being looked at as India's next big growth story. Recently, three of our country's leading EMS companies, Dixon Technologies, Kaynes Technology, and Amber Enterprises, released their quarterly financial results. And given that these are the leading players in this space in our country, their numbers and insights are a great way for us to develop a deeper and a clearer idea of what is exactly happening in this sector and also how it is performing at large. To begin with, all of these players seem to be doing pretty okay, partly thanks to the fact that the industry is fairly well positioned as a whole at this point. Dixon Technologies, for example, posted a 117% year-over-year increase in revenue compared to the same quarter last year. Their profits after tax or PAT also grew by 124% year-over-year. But if you look at quarterly numbers, their revenues actually fell by about 9.37% this quarter compared to the previous one, while their profits after tax actually fell by about 48%. But that said, a significant area of growth for them has been their mobile phone manufacturing. Dixon claims that they can now produce over 60 million smartphones every year, and they are also beginning to export to places like Africa. And looking ahead, they have also spoken about making a major move into display fabrication, which is a project that could cost a few $billion in total.
So for Dixon to get into the display fab business is extremely important because if we are able to execute this project, it gives us a very, very significant moat. And it's required for Dixon, it's required for industry, it's required for the country.
Government incentives might cover up to 70% of this capex, and Dixon expects that investing in such in-house manufacturing capabilities could drive margins well into double-digit territory once it is fully operational. Also, by making the smaller parts of these devices like displays and PCBs, they are reducing the reliance on imports and also adding more value within India itself. Then there is Kaynes Technology, whose annual revenue rose by about 30%. And while in a recent interview they mentioned that some of their orders got delayed this quarter, they still remain very positive about the overall industry's outlook. In a recent interview, Kaynes management said that for the future, they are planning on expanding to additional geographies and deepening their own design or technological capabilities.
Additional geographies like US, Europe, and also South Asia. That's one. And second thing is we need to strengthen our credentials in the ODM segment, wherein we have our own designs.
Now, for your context, Kaynes focuses on high-tech products for areas like aerospace, EVs, and medical devices, and they are now also looking at semiconductor assembling and testing. And the reason is because semiconductors are a critical part of almost every electronic product today. So moving into this space could give India as a whole an even stronger footing in the global electronics market. Then there's Amber Enterprises, which is one more interesting player in the EMS space. They reported a 65% rise in year-over-year revenue, and their profits have also risen significantly as compared to last year when they were actually negative. And while Amber is best known for making air conditioners and related parts, it is now using this particular traction and opportunity to explore new products as well. And just like Dixon and Kaynes, Amber is also investing heavily in local component manufacturing, which brings in higher profits and reduces dependence on imports. Now, one of the main reasons these companies are scaling up as quickly as we think they are is the Indian government's PLI or Production Linked Incentive Scheme. Now, this scheme rewards electronics manufacturers with financial incentives when they hit certain production targets. And by giving them this extra boost, the government is basically encouraging companies to set up or expand factories in India rather than importing everything from overseas. And over time, this has led to more investments, the creation of new jobs, and an overall increase in the manufacturing activity of the space. And at the same time, global trends are also somewhat helping India. Costs in China have been increasing, and political tensions in different parts of the world have made many international firms consider other manufacturing locations. As a result of that, big names like Apple and Foxconn have been expanding their production in India. And this trend could pick up even more steam slowly as companies start looking for more alternatives for their supply chains. Now, India has turned out to be perceived as a suitable option here because we have a large workforce, relatively lower labor costs, and strong support through programs like the PLI. And as a result of all of that, Indian companies are not just making parts for our local markets anymore, they are also sending them overseas, which is a great positive sign. Also, trend-wise, India's electronics exports has bounced back strongly after a brief slowdown in the middle of last year. In December 2024, they grew by nearly 40% year-over-year, following close to a 50% year-over-year growth in the 2 months prior to this. Now, for each of the last 2 months, these exports have been around 3.5 billion US dollars, making up 10% of India's total merchandise exports. In absolute terms, they have now tripled from 2019 levels, whereas overall exports rose by just over a third during the same period of time. But all that said and done, there are still some very significant challenges here. Even though a few companies have started making important components in-house, India's EMS sector still relies very heavily on imports for certain high-tech parts, especially things like semiconductors. Now, this ends up driving costs up and making the industry as a whole vulnerable to global supply chain issues. Expanding manufacturing lines and investing in new technologies also requires a lot of money, which can be very tough for smaller or newer firms. By the way, on that note, we recently covered the semiconductor restrictions topic in a little bit more detail in a recent episode. I'll link it in the description below for those of you who are interested. But back to the story, in addition to the other issues, the EMS business itself is incredibly fragile. Profit margins in this sector are razor thin. Operating profit margins often fall below 10%. Most EMS companies rely on massive volumes to make money, which means their entire business model depends on perfect execution. Even a small problem like delay in scaling production or higher input costs can wipe out those thin profit margins in absolutely no time. Higher valuations have also been a point of concern for some companies in this space. Stocks in India's EMS sector are often seen trading at lofty PE or price to earning multiples, sometimes 70 to 100 times their earnings as well. And this leaves very little room for error because any small slowdown in growth or hit to margins can very suddenly trigger a sharp correction here. So basically, while the long-term story is definitely very attractive here, volatility could pop up in the short to medium term, which all of us must be wary of. But despite these hurdles, the future looks still very positive. India's EMS market is expected to grow at a healthy rate in the coming few years. And the best part is that this growth is not just expected to come from making more phones or TVs, but actually from a complete system of producing all sorts of electronics and their parts within our country, India. This means more local jobs, strong self-reliance, and the potential to become a major player in the worldwide electronics industry. So for leading companies like Dixon, Kaynes, and Amber, while the overall position is fairly positive, the challenges we spoke about remain very relevant. All said and done, there is definitely a big opportunity for players in this space to expand reach, enter new markets, and also deepen their presence in whatever they are doing. With that, let's move on to the final section of the day and talk about the quick news tidbits. First, Indian jewelers are bracing for a surge in gold metal loan interest rates as US tariffs disrupt the global bullion market. Currently at 1.5 to 2%, GML rates could climb to 3 to 4% or even 5 to 6% post 20th February as authorized Indian banks adjust to rising costs from international bullion suppliers like JP Morgan and HSBC. Second, Hindustan Zinc, which is India's largest zinc and silver producer with a market cap of over 18,000 crore rupees, has put its demerger plans on hold. The company aims to diversify into critical minerals like vanadium and tungsten and expand into gold and copper mining. Third, the Adani Group, via its Dubai-based affiliate Renew Exim DMCC, is set to acquire up to 72.64% of ITD Cementation India Limited or ICIL in a 5,758 crore rupee deal. This includes an initial purchase of 46.64% or 8 crore shares and an open offer for additional 26% or 4.46 crore shares as per SEBI regulations. This acquisition enhances Adani's EPC capabilities and positions it strongly in India's infrastructure growth story. Well, that's all the news and stories I have for you today. I hope you enjoyed the show and maybe learned something new from it today. As usual, this is your host Anurag Bansal signing off. Take care and I'll see you in the next episode. Disclaimer: this content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.